this term of negative pricing has received a lot of airplay recently, and it really refers to, I mean, the first level of defense is when the cost of producing the crude oil, bringing it out of the ground, when that exceeds when that so-called break-even value is higher than the price you can fetch in the market, that sends a clear signal to the producer, you better think about shutting in production. But I think it's become even more serious here because we're potentially facing a situation where we're going to run out of storage capacity, whether it's land-based, whether it's floating vessels. Given the current rates of production, if something is not done, given this oil war that seems to have accelerated here, and the fact that it's occurring when demand has dropped off a cliff, we could see as early as late May, early June, we don't have anywhere to put this surplus production. We let the floodgates out, and we're awash in seas of oil. It could get to the point where just the cost of bringing the oil to market will exceed the value. The shipping rates, because shipping not only is to transport from point A to point B, but ships become the next line of defense in storing oil that you can't move anywhere. And now there's a tremendous incentive for traders to store and hold oil, given what we call the market structure known as contango, where it's cheap today, but you have a big incentive to hold on to that oil, defer it into the future. So when the cost of holding and transporting oil is higher than the price you can get, then clearly you have this threat of negative pricing, and this sends a clear signal to producers, leave it in the ground.
So April 2nd, John, and we've already seen our first major bankruptcy with Whiting deciding to file for Chapter 11. What do you think this looks like by the end of the month? Is it going to be a bloodbath?
Hedley, what I'd do is I would go back and look at history, 2015, 2016, when we had another oil war, the one launched by former Minister Al-Naimi. We saw close to, I think, even over 100 bankruptcies of small independents in the U.S. who went into receivership because they couldn't operate in the current environment with prices collapsing. So I don't want to be a doomsayer, but I think Whiting is just simply the first domino that's going to fall. They're a fairly substantial company, but the smaller producers, if they don't have the hedging in place, it's going to be a tough route. Chapter 11 might be the only way to go.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.